Here we go then. 20th of Jan 2023. It's an Friday evening. Welcome to all our mentorship traders. As always, our Friday evening session. We'll take a look at the Nifty, Bank Nifty, few sectors, few stocks, and we'll discuss your doubts and your trades. Now, it's been a difficult last 2 weeks. I always have the weekly, daily 75-minute time frame, and if I can see, this is how the two back-to-back dojis on the weekly time frame looks like. Now, when we have a doji on the weekly time frame, it talks about the amount of trading that has happened in that range, and at the end of it closes nowhere. Volatile, choppy, and difficult. Especially for momentum traders, it's difficult because by the time you wait for the momentum to get confirmed, and then when you get on board, the momentum dissipates. But I think looking at the weekly charts, especially, I think that this is probably, next week probably is going to be a make or break for the index. Yes, it can continue to consolidate and stay within this week's range and create another doji. But what I feel is this range breakout, I don't think it's going to last any further. It's been 4 weeks now, and we should be looking at a breakout soon. Now, the point is which way? Or is it 50-50? Do you think that it's going to break down? Or do we think that it's going to break out? Let's talk about the positive side first. The weekly charts are in a decent structure. We have our M2 still positive, momentum slowing down. That's okay. We have these levels which align pretty well to the previous highs, which is also pretty okay. Highs generally act as lows in a good structural uptrend. So these supports are strong. There's no doubt about it. And what it looks like as of now is leg up, leg down, consolidation, and maybe a leg up. This is what meets the eye immediately by looking at the weekly chart. Now, to pinpoint the levels, if I take a look at the daily chart, what I see is these two bars that we had this week was fairly impressive when we had the Nifty almost above that 18,200 mark on a closing basis. Last 2 days, especially today, this particular slip, this is a little disappointing. All that you would have thought is leg up, traditional correction, a little bit of range bound activity, and it should move up. You have the support of the momentum from the M2. So this move is a little disappointing for the long traders. Now, to pinpoint it, I feel that we are at 18,055, so almost close to that 18K mark. And today's high for the Nifty future is around 18,170. Yesterday's high is around 18,177. So around this high, this range. If the index manages to take out this range on Monday, then you should not stay short in the market. You should cover all your shorts and look for longs. Then I think high chance this breakout is going to shape up. And I think that this move should come by Monday, max Tuesday. It cannot wait, because if it waits, the selling pressure will continue to kick in, will continue to stay, and it will slip. So 18,170, 18,180 kind of breakout on the 75-minute time frame. I mean this particular range. It needs to break beyond that. That's on the bullish side. Now let's talk about the bearish side. Now, looking at the daily time frame, it's a tad bullish than bearish, specifically because of this move. That's why it's a little bit more bullish than bearish. The weekly chart, therefore, you need to wait for this breakdown. This week's low is around 17,886. So we need to wait for this weekly lows to giveaway. If you remember, Adam and Eve looking like one, but we're halfway there in Eve. Generally, it should have come somewhere at 18,300 to form the Eve, but I think next week is going to be very important for the long point of view, from a bullish point of view. If we don't get this move above today's and Thursday's high and the market stays here, then it definitely raises the possibility of this breakdown. So I think we'll get some clarity on Monday, Tuesday for sure. Bank Nifty, far better. It clearly shows in terms of numbers, it's almost close to 0.5% positive, and it was actually close to 0.5% negative on the Nifty. CNX 500 down 0.5%, mid cap, small caps above 0.5% crack. So Bank Nifty definitely stood out in today's trade. No doubts about it. And if you remember, we've been talking about this Fibonacci confluence for such a long span of time, and it's been supporting the index pretty good. And 42K stays as the psychological strong support. Now, same story here also. The weekly is not looking that great. That means if we get a break of this week's low next week, please do not think of going long in any of the banking names, because you will easily get this kind of a red candle down here. High possibility. That's on the downside, this week's low. On the upside, of course, it had held well, but Nifty had moved into a short-term uptrend, which Bank Nifty has not. Bank Nifty has not. It's done good today, but it's over the last week or two, it's not done as good as the Nifty. You remember the two green bars that Nifty had here. Bank Nifty didn't bounce back that well, thanks to State Bank. So I would suggest be a little careful and cautious and use today's high for any kind of bullishness above only today's high, and this week's low, which will mean a significant breakdown for the Bank Nifty. Keep an eye on, definitely keep an eye on State Bank. Now, to understand what was happening in the sectors, we'll bring our attention to stock charts, RRG graphs. I'll quickly open Stockage and take a look at the FII numbers. Gives me a nice visual representation of how the numbers are. So Jan’20, it's a 2,000 crore cash market provisional number. Couple of hardly any positive numbers over the last couple of a fortnight or more than a fortnight. So clearly FIIs have been in a selling mode for sure. So does this mean the weekly lows will be broken? Now, I don't know. I don't want to predict. But I know for sure that if the weekly lows gets broken on the Nifty as well as the Bank Nifty, if you're in the derivative segment, you'll get a good move. You'll get one nice move that you need to monetize it to its maximum. So I think the momentum on the downside will be better than the momentum on the upside. So that needs to be seen. Now let's come to stock charts. And I've reduced the tail length to 1 week. I've sorted in terms of percentage change. And what do I see? IT, oil and gas, Reliance did pretty good. Energy, oil and gas, more or less very much similar, overlapping stocks there. And then you have some CNX Finance, Nifty is there, marginally positive, and Bank Nifty also there. Media, big time negative, PVR was there. PSU Bank, primarily because of the way SBI came off. Small cap, auto, consumer durables. So it's, I think you can see how divided the index or the market was last week. And that's why it resulted in a doji, right? Let's take a look at, let's come here. Let's take a look at Nifty once again. And 1 week, 2 weeks, 3, 4. Let's try and understand what's happening for the last 4 weeks. Okay. Let's come to RRG graphs and increase this tail length to 4 weeks. All right. And wait a minute. Generally, all these. There you go. So I've got the length to 4 weeks. I'm going to sort in terms of percentage change first. Metals, okay, PSU Bank and oil and gas, the first three, okay. In these three, if you can see, metals is losing vertical height, which means that it's losing momentum. So is PSU Bank. Definitely one of the strongest sectors in terms of relative strength, but in terms of momentum, it's losing, okay. Then we have oil and gas. Which looks good. So I think Reliance, ONGC, or some other stocks can play a role here. I would like to sort this in terms of tail first. And this brings PSU Bank, Metal, Bank Nifty, Oil and Gas, Finance, and Nifty. So keeping Nifty, Bank Nifty aside, in terms of themes, in terms of sectors, it's PSU Bank, Metal, and Oil and Gas. Now, PSU Bank, as we just saw, it's losing momentum. If you bring your attention to the CNX PSU Bank index, then what you will notice is an Adam and Eve kind of a structure shaping up on the upside. It's like a top, Adam, and maybe Eve, maybe. But nevertheless, whether it will be Adam and Eve, who knows? But this is a resistance for sure. There's no second thoughts about it. And the way it has closed today on the daily time frame, same logic. If today's low is gone, that is on Monday, you'll get some good selling opportunities, which means you go to banks and take a look at the PSU banks. I have the top 6 wherein I have only SBI, but feel free to take a look at Bank of Baroda, PNB, and others. And if CNX PSU banking index breaks today's low next week, next Monday, then look for shorting opportunities within the PSU bucket. This will be more of a short-term momentum short because it's just losing momentum. Metals can be tricky. It seemed at times that the only sector which is there in the market which found some buying was the metals. On my screen, first half today, it was whatever little green was there, it was all metals. Nevertheless, but we have Hindalco, which is in a strong uptrend. We have Tata Steel, which is in a strong uptrend and just consolidating. And so I would not want to go contrarian short on a sector which is showing such strong relative strength. This is the CNX metal index. What I can see very clearly is a loss of momentum here. Generally, these kind of behaviors lead to a short-term correction or maybe a steeper correction. But I'm not too keen on shorting metals, primarily because of its relative strength, which brings me to oil and gas. Now, if you bring your attention to the CNX Nifty Oil and Gas Index over here, this is a good-looking index. This is a far good-looking index, which is on the verge of giving you a big breakout. I don't know whether to call it a cup and handle or whatever, but definitely a breakout candidate. It's not a good plan to look for shorting opportunities in this pocket either. PSU Bank, chances are high, but metals and oil and gas don't. Next comes those which are in an improving quadrant. I like this quadrant the most because that's the one which leads towards leading. And we have energy, which, and I said, with oil and gas, it's kind of overlapping. You have the OMCs, Reliance, ONGC, Coal India also comes there. CNX IT. Let's talk about the IT pack. Now, IT, if we take a look at the CNX IT index, it gave us a very nice surprise rally, sharp, quite a sharp one, which is over here. See how the 2 weeks of CNX IT was compared to the 2 weeks of dojis for the Nifty. So IT picked up good relative strength over the last 2 weeks. It's cooling off now. It's definitely cooling off. I have a rising wedge kind of a behavior on the 75-minute time frame like this. It's broken down. So I think that IT will cool off a little bit and then give us a move. Keep an eye on TCS, HCL Tech, Infosys. Not ready, but do not look to short IT. IT, you should look to probably look for a long opportunity if you get such an opportunity. Now let's quickly talk about the ones which are in a lagging quadrant. You have media. We generally do not show much interest in media, so I'm keeping it aside. What I am interested to talk about is real estate and pharmaceuticals. So both are placed in the lagging quadrant. If you take a look at the reality, CNX reality index, the weekly charts are all well nicely placed in this 3-week consolidation and maybe a breakdown. I had a very bad patch of trades with DLF. Finally, the stock broke down today. It did fall, but before that, it made me pay a price. Nevertheless, I'll get my chance someday. So real estate on the weekly charts are not looking good. Same like the markets. If the lows are broken, the chances of a downtrend opening up, you can see very clearly the momentum is supporting on the downside. So this guy needs to break out, and it's been in this range for quite some time. And when you take a look at CNX Pharma did come off today quite a bit, but my interest is the weekly range. This clearly M1, M2, or our T1, T2 trend indicators are negative, and we are stuck in a range. There is a defined support here. So will it break the lows? If you remember, I was talking about these lower shadows, right? So I think within even the lagging quadrant, there are pockets of weakness. Real estate can open up on the downside. Pharma can open out on the downside. Auto is not that weak. CNX Auto need to be a little careful because the weekly charts are still okay. They're not bad. It's the daily charts which is losing a bit of strength. 35-minute definitely has moved into a downtrend, but auto, I'm not too sure. At times I get a good setup on the long side. At times I get a setup on the short side from some auto ancillary or some two-wheeler. So auto, I'm not very confident. I probably will not trade auto, but I'll be looking for opening up on the downside, maybe on real estate, pharma. That means I'll also take a look at if the bank Nifty opens up, then CNX PSU bank index. On the upside, if I get a breakout, then I'll be looking for oil and gas, and I'll be looking to buy on a dip if stocks like TCS, Infosys, HCL Tech gives me an opportunity. But having said all of these things, if and only if these lows on the Nifty and the bank Nifty especially, if these lows are broken, then you should hold yourself back, especially in terms of your cash portfolio, because high chance we'll get some distinctly lower levels to deal with, and we'll get better levels from an investment point of view. Now, before I take up your doubts and questions, a quick look at the global market shows that US markets are flat. They had quite a sharp cut last 2 days, and today it's just completely flat. CNX 500, and this is Dow Jones Industrial. Weekly charts giving back completely all the gains of the last 2 weeks. So a lot of things happened in the US markets, unlike our markets where it was stuck in a range with a lot of volatility. Over here, the volatility is there, but in a much wider range, much wider range in terms of the oscillation. SGX is completely flat, just 26 points positive, trying itself to stay above that 18K mark. Gold had a phenomenal run, and it is continuing to give that kind of a move. No signs of any divergence or weakness on my charts as of now. So gold has been doing phenomenally weak and good. And crude, volatile. Recently, it has got really volatile. As we talk, this asset is down. And I think once this target is met, if you remember, we had drawn these targets. I think it's going to consolidate a little bit. What it's trying to do is form a base here. So if we get a base breakout, a formation, this formation is over and we get a breakout, then crude related stocks and sectors which you feel will get impacted, you should keep an eye on them, right? Okay, so this brings me to an end to our market discussion. Now the rest of tonight's session, let's talk about your doubts, question, and your trades.